So we saw a very big crash happening in the market today, that is 13th of March 2024. So we're going to discuss the reasons behind this crash. So there was a guideline that there was a warning that MFI and SEBI issued to the mutual fund houses regarding that there's a fraud building up in the mid cap and the small cap segment, and they need to conduct a stress test, which was to find out that if in a condition of market downturn, would they be able to liquidate their assets quickly, since the small cap and the mid cap segment have a lot of equity stocks which are highly illiquid, and which would cause a lot of trouble to to the invested people. So uh, this uh, this has spooked the market. This stress has spooked the market and and the confidence of the investor. The This test would also had caused that flows to the small and mid cap, which was on the rise, because there was spectacular performance which they had shown in last 1.5 year, and a lot of investors were running behind to chase all this return. So once that inflow is restricted from the institution side, so there would be a restriction, and the flow had stopped into the mid cap and the small cap segment. As of now, this correction was very long due in the market, as the market was definitely heated in this segment, and it acts in the interest of the retail investors. SEBI had done this similar thing about in the year 2018, when they asked the mutual fund companies to follow the segregation, to follow the guidelines for their defined guidelines for large cap, mid cap, and small cap funds. And after that correction in 2018, it took about 8 years for small cap and mid cap to bring back to result. But this time, I think the market is a bit different from what it was last time. So the correction is happening. It's good, but I think recovery would also happen in a very fast time. So let's see how much the market had fallen from their recent highs. If we look at the Sensex, it had corrected from the recent high to by 2% today. Nifty by 2.2%, Nifty Bank 1.8%. Nifty mid cap, we can see that it corrected by close to 6.8%. Nifty small cap had corrected by 11%. 11%. So this is a very healthy correction that we are seeing in the market. I would see, and this has caused the PE valuation to come to a very reasonable level. So the market has started coming to a reasonable level, where we can see that the things are still not cheap. The market is still not cheap, but I think the market is at a is at a fair value right now. Nifty P trailing P has reached after today's correction at 22.7, which is up, still above the 2 years average, and but it's well below the 5 years average now. Nifty Midcap 150 trailing PE, which had reached its highest in the 2 and 5 years, has now corrected after this correction had fallen to 25.6, which is at the 2 and 5 years average. Nifty small cap 100 trailing PE, which is currently now 26.3, is now close to 2 years high, and is below 5 years average. So we see that the valuation has come a bit to a normal level right now. So what now? What should I, as an investor, we should think now? So as I have been always been advocating that the major concern and the major thing that any investor should do is keep their asset allocation in check at each and every point of time, at each downturn, and when the market is at the full swing. This fall shows the more importance of asset allocation, because if once the recent small and mid cap run up would have was done, the asset allocation would have been skewed towards the small and mid cap, and the profit booking would have helped the customers to align their portfolios into a better strategy. Our recommendation is that you should continue investing through this SIP mode. Lump sum is not still not suggested, and your asset if your asset allocation is still secured, please get it corrected. I'll be putting up a link of my blog where I have written about asset allocation. You can read through that blog, which would help you in getting your asset allocations right. Thank you for watching this video. Do subscribe and like.